Well, good evening, friends, and we're glad that you could join us for our first nighttime live broadcast of the Association Essential Series from us here at HOALiving. We're grateful for everyone who could make it tonight. Grateful for all those who've put together tonight's program on my staff. Thank you, thank you, thank you. And I hope that you find that this is time well spent. If you're one of the majority who will watch this on recorded video later, we're also glad that you're watching and hope that you find this presentation tonight beneficial. It's a great topic. I tell this story on insurance that as we're going through our credentialing classes to get our designations, there's a 2-day course on risk management and insurance. And I saved it for very last. Many years ago, because it was the topic that kind of overwhelmed me the most. There's just so much to it. And so to have an insurance 101 and to crunch just literally books and books and books and hours of information into a short period of basic insurance information is very difficult. So we say this is a primer for more information and hopefully worthwhile of your time. Just a reminder that you can find all of our programming available on the HOALiving.com website. Go to the training tab at the top, and then the first drop down is Association Essential Series. And there, once you're there, in the bottom corner, you'll see the previous session recordings. And click on that and you'll see little thumbnail clips of all the different recordings that we've done, which basically started a year and a half ago when COVID started and we had to go to the virtual format, but we're glad that we have done that. This is our last AES for 2021. We don't do the end of November or the end of December for obvious reasons. Basically, it'd be me talking to nobody because people have better things to do. So happy holiday parties to everybody. And we won't have education events in November and December. However, we'll pick it back up in January. But what have we done in 2021? It's been a great year for us here in the HOALiving companies. Difficult, true, because of the ongoing pandemic, and still just hoping beyond hope that we can get through this thing and be done with it once and for all. But we've been able to, you know, as my mother would say, turn lemons into lemonade. And we've had a great year, which has included awards, new impacts, and major growth for the HOALiving companies. As mentioned in previous sessions, we did win the Best of State Award for the Business Services Property Management Division. Earlier this summer, we were able to celebrate that, and we're very proud of that honor. And we hope to be able to continue to earn that recognition on a regular basis in the state of Utah. And at the recently completed national conference in Las Vegas in August, we were awarded 2 awards. The Award of Excellent in Designations, which is awarded to individuals and groups who've made significant contributions to advance the Community Associations Institute's designation programs and ethical standards. And we also won an Outstanding Volunteer Service Award, which the program says from time to time, a volunteer rises to a higher level and is honored with Outstanding Volunteer Service Award. This top honor recognizes the outstanding leadership and long-term dedication shown to the Community Association Institute and the Community Association housing model. And those awards could not have been earned without several great people on our team. And we hope that your experience with us is deserving of those awards. Also at the national conference, we were able to have 3 new PCAMs, Professional Community Association Managers, be honored and receive that exclusive designation. There's less than 2,000 PCAMs in the world, and only 9 portfolio PCAMs in the state of Utah. And now with Scott and Greg and Megan reaching their PCAM, 7 of those 9 work for the HOA Living family companies. And we're very excited that they have gone through the long and difficult process of earning that designation. It is not easy to achieve. Also, from the beginning of the year, Community Association Management in St. George joined the HOA Living family of companies, and we've just met with all those board members a couple weeks ago in a wonderful event in downtown St. George at the Electric Theater, and talked about even further integration into the HOA Living family. And we're extremely grateful to have those board members participating and the wonderful new employees that come from our family at Community Association Management. And with those couple, almost 22 employees that came from there, we're also have added 11 other additional employees this year. So 33 new employees. Now we're over 120 full-time employees in HOA Living families, and all of them working very hard on behalf of our association clients in multiple states. But 95% of our business still in the great state of Utah. So if you are joining us from Arizona or Idaho or Wyoming, welcome. We're glad that you're here, but we know still and will always be based in Utah with our corporate headquarters here in Draper, and grateful to have all of our wonderful business across the state. As part of that, we have opened 4 new offices. There's a picture of our brand new beautiful St. George office, where FCS St. George and CAM have now merged into one single entity in St. George, so we don't have 2 different offices. And it's right there on the corner of Tabernacle and Main Street. It's 20 North Main is that beautiful building, and we're the ground floor there on the southern end. And we've also expanded our corporate office in Draper. That's the picture below. We now have a main entrance on the west side of the building, and which is where most of the parking is, and that opens in a couple weeks. And we've also have a new office in Cedar City opening up in the next couple weeks, and in Ogden, downtown Ogden on Grant Avenue, just 2 blocks south of downtown area. And we're excited to have a half dozen of our staff start working up in Ogden shortly. All right, well, let's talk about insurance then, and try to make this enriching and educational without making it too simplistic, because risk management insurance are definitely not that. A big part of your job as being a board member in an association is to manage risk. And risk management, right? Risk management, I love this definition, the process of making and carrying out decisions that will minimize the adverse effects of accidental losses upon the community association. So risk management, insurance is one part of risk management. It's not the only part. And we're going to focus on insurance, but it's important to understand that it's one of many tools when it comes to risk management and risk control. What are the kinds of risk that we have in our associations, and what are some of the different things we can do to control those risks? Well, there's 4 types of controls there on the left, and there's some practical examples there on the right. One is called exposure avoidance. So you have rules against having alcohol in your clubhouse at parties if someone's reserving the clubhouse. That's an example of exposure avoidance. If you don't serve alcohol, then there's less liability that the association, something will go wrong, or someone will be harmed, or heaven forbid, someone might die. And therefore, that is a risk control. And now, if the worst case does still happen, then that's why you buy insurance. Loss prevention and reduction. That's why we have inspections of our pools and our pool chemicals. That's why we have elevator inspections or fire suppression systems, right? That is loss prevention and reduction. We can have structural and integrity inspections. terrible situation at the Surfside condos in Florida this summer, and the collapse of that building. Loss prevention and reduction. They actually had inspections. They had reports telling them that they had major structural issues that they needed to address. The community was punting that ball down the road, and eventually, as you know, a full building collapse, and about 100 people have died because of it. That's the extreme, obviously, but having the loss prevention reduction is having those inspections in the first place. Segregation of exposure, right? So do we have backups? Do we have extra parts on hand to our high-rise buildings that have a common boiler and chiller parts that are, or even just making it simple in our pool heater or our pool pump in our clubhouse for 100 townhomes. These things, having an extra part on hand so that when those parts go bad, that you can instantly replace it. Now, how cool is that if you have that these days with our supply chain and delivery problems that are making it very difficult to get new parts? If you thought ahead and you purchased it and it's just sitting in the space, ready to go in once the other part fails, that is segregation of exposure. And then contractual transfers. Your contract with your landscaper, your contract with your management company, or contract with XYZ, you're telling them that they have to insure themselves and their employees. And you are contractually putting in there a language that indemnifies you, the association, from risk that are inherent in what they are doing for your community. So those are 4 examples of risk controls. All of them lead to, I'm not saying, and you cannot go without insurance, but if you use the risk controls, it should help minimize claims and make your insurance that you have cheaper. We talk about in all of our topics every month, right? We talk about where do the requirements come from for insurance. And there are sources of insurance requirements that all of us always have to use in our associations. So first, obviously, the laws, federal law, state law, local laws, and case laws. Here, we have, let's see, get that to work, the Utah HOA laws. This is a book of all the different laws that applies to condos and non-condos in the state of Utah. And case law, of course. The association's governing documents, and we'll look at examples of those tonight. Secondary mortgage market, lender requirements. Fannie Mae, Freddie Mac, and our friends there have specific requirements for minimums of insurance that have to be had by your association, enable for them to underwrite lending. And if you can't get lending in a community, then that makes it so there's not much value. Contractual obligations. You might have contracts that require you to provide insurance. And then just the good business judgment rule. And it's very likely, and one of the topics we're looking at for 2022 for an AES is talking for the full hour about good business judgment rule, how it affects you as a board member of a nonprofit association. But that's really, right, what is that? That's doing what any reasonable person would do, using your best business judgment. Remember, if you use your best business judgment, then a court can't overrule the decision that you made. Sorry, I have a choky mouth tonight, so I drink a little bit of water. So that's our sources of insurance requirements. Remember, if you have a question during the program, to go ahead and type it in to the chat, and our moderator at the end will bring those questions up. So state-specific statutes. I've highlighted our 3 main associations, are states where we have associations that we manage. And it's a little bit different. Our social media platforms, and there's Facebook, Instagram, Twitter, and LinkedIn. There's our addresses at each of those locations. We do regular posting on insurance. It's in the regular rotation. And so make sure that you're following us on your favorite or all four if you have them. No, we don't have a TikTok. I know that disappoints a lot of people. If I don't have a TikTok, the company's not gonna have a TikTok. I don't do dances. I don't do those things. So we don't have TikTok, but we have Facebook, Instagram, Twitter, and LinkedIn. Follow us on those. We give a lot of great information through the course of a month with our daily postings. So let's talk about Utah. Since 2011, we did major revisions to the law. And so it's actually in the Condo Act, 57-843 is the law. And we have a similar provision in the non-condo law in 57-8A. And it requires, since 2011, for multifamily. So these are attached housing like townhomes and condominiums. They must ensure the building structure regardless of the exterior's maintenance responsibilities. There is also requirements for liability insurance to protect those who use the facilities and the board officers of the association. So homeowners are responsible to pay the deductibles prior to insurance claims being filed by the association. And typically that's up to about a $10,000 limit. Why the idea of a $10,000 limit? Well, that thinking is that most small water claims fall below $10,000. So if the washing machine hose pops off or the bathtub overflows or toilet overflows, it's generally that damage is below $10,000. And those things are generally the cause of from a homeowner. And so that is why that $10,000 mark came in. So my light has turned off in my room, so hopefully you can still see me. Normally during my day broadcast, someone comes in here and turns it back on, but I don't move enough while I'm presenting. So hopefully not all in the dark with me. So then Idaho, the insurance requirements in Idaho are typically found within the governing documents themselves and can vary widely based on the specific language of those documents. So boards should implement industry best practices as part of their general fiduciary duties to properly manage association assets. It's important to consult with insurance agents and attorneys who are familiar with the insurance needs of your association. And similarly in Arizona, the insurance requirements in Arizona are typically contained once again in the association's governing documents. In addition to these requirements, condominiums have minimum insurance requirements. Condominiums must carry liability insurance and insure common elements, and in some cases, the units themselves against all risk of direct physical loss at a minimum of 80% cash value after deductibles. Unless otherwise specified in governing documents, any improvements made by unit owners may not be covered, need not be covered by the association. So that's different. In Utah law, the improvements inside the units are covered by the association's master policy. And we actually have some interesting questions that some of our high-rise partner associations have brought up, like, well, what if some units do like incredibly fancy finishes and most units don't do, just have the baseline that was built with? Who's responsible for paying the extra premium to cover the cost of those enhancements that are nicer? So that's a great question that is in Utah that we're looking at. We might have to legislate or define because of the way the code is written. In Arizona, what the code says is, fine, owner, make your unit as fancy as you want. The association doesn't necessarily have to provide that coverage. All right, so reviewing the governing documents. All three states, even where Utah has very defined, a lot of other states talk to us every time we're at a national conference. It's the Utah statute, even with its couple of imperfections, is is a model for other states that they're looking to implement in their states. So, but still, all of them say you got to go to the governing documents of your community. So let's look at just some examples, right? There's generally a whole section in your CC&Rs, in your declaration that deals with insurance. And there's a typical cutout from one of our clients. And let's just kind of go through for some of the things that we look for as we're reviewing these sections, as we're managing your associations. You can see words like we've talked about before in other presentations about the word shall and the word may, right? Shall, you shall do it. You do not have a choice. May, well, maybe it's an optional. I may do it, may not do it. Okay, so we always got to look for the word shall versus the word may. In the, basically they all begin with this clause that says the board shall obtain insurance as required in this document or in other documents or other applicable laws. So then the statute comes into play. Then it'll talk about property insurance. If you're attached buildings, especially in Utah, you're since 2011, the association has to provide, shall maintain a blanket policy of property insurance. Well, what if you're before 2011 or you're in a different state? Well, if the document says the association shall maintain a blanket policy of property insurance on what? So you have to do it, but what are you doing? Well, in this example, it says the common area and all buildings, fixtures, and equipment thereon that are obligation of the association to maintain. So it'll tell you you have to do it, and it'll tell you what you are in to insure. Other kind of language we look at is, what kind of policy. There are many different insurance products. That's part about what makes it a little bit confusing. And so in here, the words are, the blanket policy shall be an all-in or all-inclusive insurance. And then it'll say, and shall, there's the mandatory word again, shall include insurance for any fixture, improvement, or betterment installed in the common areas. So this little practice, what I'm trying to get is you got to go read through your association's governing documents to see what the requirements are. And then further here, at a minimum, the blanket policy shall afford this kind of protection against loss or damages by fire, windstorm, hail, riot, aircraft, vehicles, vandalism, smoke, and theft, and all perils normally covered by special form property coverage. Then it needs to be, typically you'll see this language, 100% of current replacement cost. And then it'll talk about in section 4, guaranteed replacement costs or replacement cost endorsements. So guaranteed replacement cost endorsement under which the insurer agrees to replace insurable property regardless of the cost. So they might have only valued it at $5 million to replace it. However, now when they build it, especially in this economy right now today, it might cost $5.8 million. And you've only been paying for $5 million coverage. You have guaranteed replacement costs. The insurer is agreeing that no matter the cost, they're going to replace it. This association is required in this document to have that kind of coverage. The association shall, in 5, shall keep an amount equal to the association's property insurance deductible or $10,000, whichever is less, in an operation savings account. This is a Utah association. In Utah, the law requires that the association set aside, that's the word, set aside the amount of a deductible. Because remember, yeah, if I'm in a condo and I have a water leak and it damages my unit and the neighboring unit and it's under $10,000, we're responsible. But what if that water leak damages the fitness room or the common lobby or the clubhouse? Well, the law is saying, association, we want you to have the coverage for that deductible in your accounts. Set aside, this one says in an operating savings account. Doesn't have to be a separate account just for that purpose, but it has to be there. This talks about, section 6 talks about that the association's policy is the primary coverage. So if there's duplicate coverage between an individual unit owner's coverage and the association's policy for these kind of claims, the association is primary. And it talks about, it's also echoing from the statute that the board can use their business judgment in what kind of insurance, whether or not to file a claim, whether they just want to pay for it. It's giving the board those rights. It talks also about giving proper notice to the owners. You can't change deductibles without noticing the owners, but also it's just a good idea to let owners know what kind of coverage they have on a regular basis, because they forget and people move in and out. It'll also talk about what kind of liability coverage you have to have. So that's CGL, we call those, or liability, general liability insurances. And once again, this association, it's the word shall have it. And you can see up there, and see if I can get my pointer over here, it's that you'll have liability and it shall not be less than $1 million. Okay. You'll have directors and officers insurance, which is a form of liability insurance, but it's a specialized form. This says that you shall have it. I would never serve on the board of any nonprofit that didn't have directors and officers insurance, because then I might be personally liable for some of the lawsuits that happen. So that's why we have directors and officers insurance. Further on in this community, theft and embezzlement insurance. Now look, the word changed to may. So this association may have theft or embezzlement insurance. But remember, when we go back to the different sources of insurance requirements, one of them is the secondary mortgage market. Fannie Mae and Freddie Mac and those friends will not insure mortgages if associations don't have a minimum level of theft and embezzlement insurance. It's typically all the reserves plus 3 months of the operating. But the CC&Rs here say, and maybe, you know, maybe there are no secondary mortgage providers in the association, they don't necessarily need to have it. Poor idea, I think, not to have it, but it's a may. Workers' compensation insurance, this association shall purchase and have it if they have employees of the association. The employees of management or the landscapers, because you've contractually transferred that to them, you're not required to have workers' compensation insurance for them. However, the question always comes up is, what if a volunteer gets hurt doing something in the community? Well, that's a workers' compensation claim. And so you want to make sure that you do talk to your community manager and your insurance agent about buying a volunteer's workers' compensation insurance policy. A lot of insurance agents don't understand this, and so they might say that you don't need this kind of a coverage, or that it doesn't exist. Back when Utah was a single provider and we just had Utah's workers' compensation insurance, they often would be confused about volunteers, and they had a way that they would trick their system. But it is an offer. Now Utah's an open market, so it's not an issue any longer. It talks about the named insured shall be the association there in 8.8. Just some other examples of this is another example. Here's some kind of different language that you see. And most have this, but not in that first example, but it says that the insurance shall be from a best rating of A or better company and a financial category of 7 or larger as established by AM Best company. So these are ratings. You can buy cheap insurance that does not meet these criteria, but if your document says you shall have that kind of coverage, then you have to. That authority to adjust losses shall be vested with the board. It's the board who gets to decide those kind of things. Different insurance requirements shall be required. 6.4.1 there at the bottom, property insurance, liability insurance policy issued to association may not prevent an owner from obtaining their own type of insurance. Then once again, I just want you to get used to looking at your documents and your rules and the word shall and may, the things you should have, and how you need to administer your insurance. And the insurance section generally is pretty long. So if you're dealing with an insurance agent who doesn't ask you for your CCNRs and specifically the insurance sections, then I'd look for a new agent, because how do they know what your shells are and the type of coverage you should have without having your documents? Let's see. This is interesting here, right down here. The association's deductible shall not exceed $5,000 unless 30 days written notice is mailed to all owners. So where $10,000, it can go up above 5,000, but you have to give proper notice to the owners, at least a month in advance. Earthquake and flood insurance. Boy, these are hot topics that we always get asked. So this is typically the language that we see. The association shall have the right, but not the obligation, to maintain earthquake and flood insurance. The association shall, which means you have to, obtain earthquake and flood insurance if approved through an affirmative vote at least 67% of the members of the association at a meeting of the association. So that's the earthquake insurance right now is very expensive in the Utah, Idaho, Arizona area, not down in the Phoenix area, but in the Gorge area. And so associations like, should we have it? Should we not have it? You know, it's different if you're a single high-rise building, or if you're a lot of buildings, there's higher deductibles. And then flood insurance is whether you're not in a floodplain. And we have a good question on flood insurance later at the end we'll talk about, but some association documents say you shall have earthquake insurance. Some say you only have to do it if 2/3 of the homeowners vote for it. But the board can, even without that vote, if the board decides to do earthquake insurance, they can do it. That's using your business judgment rule. So let's look at the different risk exposures and understanding them that we can buy insurance for. Now that we know what's required through reading the law and through reading our governing documents, what can we buy insurance for? What are the types of exposure? 4 types of exposure, right? Property exposures, liability exposures, income exposures, and personnel exposures. And let's look at those individually. So property exposures, this is the one we understand the most, I think, at least the tangible property. So our buildings, our clubhouses, our condo building, our townhome building, it's easy to buy that kind of insurance. And we can buy insurance for the contents inside. Now, associations aren't required, as I'm a townhome owner, they're not required to cover my personal contents in my townhome, but you still have to have some contents insurance. Do you have equipment in your fitness room? Do you have a nice library or den? You have some equipment. Do you own snow blowers or things like that? Those are contents. Those are tangible property exposures. But there's also, you can buy intangible property insurance for those intangible property exposures. So this is information that we might have. This is our websites, things like that. Those are intangible properties, and there's possible exposures there. So after our property exposures, we have liability exposures, right? And we have, I love this quote. It's coverage for bad things that happen to other people because of you, or a decision you made, or just simply because it's your property. This covers property damage, bodily injuries, personal injuries, and advertising injuries. Income exposure is for loss of incomes or increase in expenses that happen. And that's an exposure that we can get insurance for. And then obviously our personnel exposures, our workers' comp, also claims of let there be light, the lights have returned in my office. not only workers' comp for workplace injuries, but also if you have employees, claims of discrimination, of harassment, all those kind of things, that's a personnel exposure. So what are the coverage options then to cover these? Most associations carry property insurance and liability insurance to cover incidents that happen on common property. It's also common for HOAs to have standard liability insurance to protect the board members, and acts of errors or omissions. Look through the documents, see what you have to have, what you don't have. And then there's a lot of great articles out there on insurance for homeowners associations. Property coverage. And we had a great seminar. Last year, we did a whole insurance series. So remember, I have down here in the corner here is this box. So this is a little thumbnail clip. We did a whole hour plus actually, on property coverage. What we're talking about here in this 1 minute, there's a whole hour program. You can go to our website, training, Association Essential Series, previous sessions, and you can find this to get more in depth. And I'm joined by some of the leaders of the insurance industry in the state of Utah in discussing property insurance for an hour. Commercial package policies, your mechanical and equipment breakdown insurance, ordinance law insurance, electronic data, there's your intangible property right, and flood insurance. Your liability coverage and exposures have these kind of insurances. There's your CGL, hired and non-owned automobile liability. That's a funny name, but that just means that the association can have vehicles, sure. But if you're a board member and you're driving doing association business and you get in a car accident or some sort of incident that is insurable, this kind of insurance covers for those claims. Umbrella insurance, and of course, are specialized for board member and volunteer protection directors and officers liability insurance. Once again, we had 2 last year. We did a whole hour on understanding that CGL policy that you can find, and then a whole hour on directors and officers insurance alone, because that's such an important topic. And that insurance works a little different than other insurances, claims made versus when it occurs. And so it's important to understand those issues. So little did you know, tuning in tonight and watching our hour program, now we've given you additional hours of information to watch. These are great programs at the beginning of our days of recording, so don't judge our technical quality, but great information with insurance experts joining me in those discussions. Income coverage is available, and we talk about this. It does not cover if an owner stops paying their dues just because they're delinquent. That's not it. They're different kind of income. Think of your clubhouse. Sun River in the St. George, Utah area has a beautiful ballroom that they can rent for thousands of dollars per event. Well, if that building had a fire and was destroyed and they had to cancel 6 months worth of bookings, think how much money they have lost in potential income that would have come into the association. There is coverage for that. And then extra expense insurance. Well, in the same building at Sun River is the staff, is a lot of the staff that runs that large association. Well, if the building burns down, where are they going to office at now? And so you have to get a temporary office trailer out in the parking lot so that the employees of the association can still do their work. That's an extra expense. And so there's insurance coverage for that. There is the assessment fees, receivable insurance, very specialized. I don't even know if I totally understand it. You can consult with your insurance agent. Of our 500 clients, no one carries the assessment fees, receivable insurance, because it's it's not very expensive, but it's very limited in when you can use it. Once again, workers' comp insurance and employers' liability insurance are to cover our personnel exposures. there is one final, the 4th hour of our insurance series that we did in 2020, where we just have a panel of experts and we shoot different questions at them that were submitted by board members. Very informative, kind of wraps up all the insurance issues. So there's a 4th hour that you can watch with multiple experts and myself talking about the various questions that came up during the year and commonly asked questions. So now most folks say, hey, we hire you, you're the management company, you go get the insurance agent, and that's fine. Here's how we evaluate, or if you're not one of our clients or you're self-managed and you're tuning in, what are some of the things you should do to evaluate an insurance agent broker in writing your policy? I'll tell you, it shouldn't be the guy who's doing your auto policy. Probably not, generally, for the most part. You want to look at experience and specialties in specializing in the community association field. Is this a major part of what they write? Knowing about community associations and their nuances and those specific state statutes. Do they even know they should be reviewing your governing documents for information? Claims processing history. You can pull this and ask them to provide that so you can see how quickly they're handling claims. Participation in, do the agents participate in CAI or in their insurance trade groups and the real property trade group, insurance trade group? What is their professional standing? What are their licenses? What's their bonding? And the CIRMs. This is a designation like the PCAM for community association managers, called the Certified Insurance Risk Management Specialist. And these are folks that have gone through a certain amount of education, training, and conferences and passed exams to prove that they are experts in community association field of insurance. We have 2 folks in Utah, and 90% of our Utah policies, and actually there are also both of these in Idaho as well. Bayot Kalzanowski and Lamond Woods are both CIRMs, that top designation in the field, both experts in the insurance industry. There's their contact information. If we as your management have a choice, one of these 2 is writing your insurance policy for your association. You can also go to directory.caionline.org for any others that might pop up. All right, well, questions and answers. And Jessica will join me in a second, but we do have a couple questions that were pre-submitted. People saw the topic, so let's get to those. First question has to do with barbecue grills in multi-unit buildings, especially stacked condominiums. Are barbecue grills allowed on stacked condominium balconies? Very common question, and here's why they're asking it, and it's kind of the answer to that question. So the U.S. Fire Administration and Fire Safety Building Code says no, you can't have regular full-size 5-gallon propane tank type of grills or large charcoal grills. It says no hibachi, gas-fired grill, or charcoal grill that it says, let's see, let's get over here. Shall be used or kindled on any balcony or under any overhang portion or within 10 feet of any structure. Well, most balconies don't go out 10 feet. So this is allowed. These little 1-pound propane tanks, a small hibachi type of grill is allowed by the fire code. The insurance companies are following the fire code and the recommendations from these national, international agencies even. And so now there are some exceptions. We do see some balconies that have fire suppression. So there's a sprinkler up in the, if you look up at the bottom of the balcony above you, there's a sprinkler there. That's okay then. Or there's some materials and different materials that allow it. for the most part. And insurance agents will come and they'll do inspections, and they will say your association's at risk of losing their current coverage unless they tell all these owners to remove their full-size barbecue grills. So the question is, well, how on earth do we enforce that? That's a big ask. We have 300 condos in here, and there's a lot of balconies, and a lot of people have their grills, and we don't want to tell them they can't grill. Well, that's why you hire third-party management. We go around a lot of communities. If that's on our list of things we've been asked to inspect, they'll pay a couple times a year, couple hours for an inspector to go around, look for those grills, and then we send individual letters just reminding the owners. We have a nice form. These pictures come from our form that you can, here's an example of what you can have. Here's an example of what you can't have. Right there too, in the code says electrical ranges, grills, or similar electrical apparatus shall be permitted. So they're just looking for, the problem is this unlimited amount of fuel that can cause a building to go up in a bad fire. Another question that we got was, how does an association enforce rules of owners smoking too close to the buildings or on their own balconies? So, and this is the greatest comic in our community association industry ever. I love it. Hey, honey, the condo board is trying to help me quit. Okay, so the case law, courts have ruled that associations can set the smoking rules for common area and for individual units. The Utah law says that secondhand drifting smoke is a nuisance. And if you look in your CC&Rs, every association has a general nuisance clause that allows the board to enforce nuisances. The problem is this Utah state code, when it comes to secondhand smoke, it basically says that it's an individual, the person who is distressed. So the secondhand smoke's coming into my unit. I'm the one that's aggrieved that I need to file the lawsuit against my neighbor, whoever's doing that smoking. Associations generally get involved and they'll send letters, but I still have not seen an association start a lawsuit over this. The attorneys, and there's been no case law on the secondhand smoke issue specifically, but lots of case law on that. The associations do have the right to say you're a condo complex, 20 buildings, 300 units or 240 units. And the minute you drive off the city road, all the parking, the tot lot, the clubhouse, all the buildings are all common area. And so we do have some clients that say, hey, smoke away. You have to do it in your car, or you have to do it on the public sidewalk on the outside of the complex as you're coming in. And that has been held up. That is something that associations have the right. They have the right to govern the rules of their community. Most communities do allow smoking in interior units with the caveat that it can't disturb anyone. So a lot of times smoke, it'll travel and it'll go through adjoining party walls, go through the ceiling, go through the floor. And if there's shared ventilation and filtration in some of our mid-rise and high-rise buildings, then that becomes really problematic. And a lot of time in those buildings, people can smell someone smoking inside their unit and they have no idea where it's coming from. The courts have said, association, it's not your responsibility to have to go track down and try to figure out where that smoke is coming from. However, if a resident is able to identify where it's coming from, the association can get involved and write letters to the owners that they know are doing it, and set up maybe smoking areas. They can put up the signs, those kind of things. Just looking at the question. Okay, yeah, we talked about that on the fire suppression systems. So smoking, We have some good law in Utah. I'm actually not familiar in Idaho or Arizona with their smoking statutes, but it's really tough. And unfortunately, most people go running to the board to do this tough management of where the smoke's coming from. And it's an impossible task. And so one thing we've done before is we've sent a letter to all 12 units in a building and said, hey, someone is smoking and it is disturbing other people in the building. Please cut back, stop, use a fan, something, and try to see if that will help. Another question that came in, will our insurance ever cover flood damage caused by a rainstorm, or do we need flood insurance? Question of the decade right here. Tough question. Every policy is different on water backup or stormwater or sprinkler water. Some policies consider from the irrigation system and that pipe breaks and now is flooding the unit, they consider that a flood event. And unless an association's in a flood plain identified by the government, we don't have associations that have flood insurance. So we've decided that in the first part of next year, we will do an entire association in essential series on flood insurance and water events in communities. It's complicated. We'll bring in some of the experts and we'll talk about this more in depth. I wish I could give you a quick answer. There just isn't one. Talk to your insurance agent, see what kind of coverage you have. We have been successful by putting pressure on the agents and the carriers lately that the amount of money they'll do for like water backup or sewer backup was very small, like $25,000 or $50,000 maximum. And if you have multi units affected, that money will go very quick with mold and water remediation. And so we have had some success now just in the last year or so in getting those numbers raised. But still, when is it a covered event? When's it not a covered event? Very tricky, very confusing. We'll have a special education event on that in the near future. And yeah, is the Jordan River going to rise up, overflow, and flood lots of our associations? No, we do have creeks and canals that do that often in Utah. And so we'll talk about that, but we'll also talk about all kind of water exposures and how the best way to protect your associations are and the coverages that you need. Jessica, do we have any other questions that have come in, or are we good?
No, we do not yet.
Thank you.
We're good.
So if you have a question, go ahead and email it to your community manager and they'll get it to us. We'll strive to get you the right information in a timely manner. Now, look at this. We want to know, we have a couple ideas of couple topics we've talked about that we're going to do next year, but we want to fill the schedule with what you want. So you can take your handy dandy phone device and turn the camera on and just put it right up to your screen. And then it'll tell you, do you want us to open that website? And you will get a form that we've created. And yeah, my virtual screen makes it hard to see. There we go. And you'll have a form there. And it asks you, what kind of topics would you like to learn about? There's a place for other in there. And what events did you like the most this year? Because we do need to repeat some of those things. There's always more information than we can cover in an hour. And so please, scan your QR code. Even if you're watching this next July of 2022, we would still love your input and let us know as we're building future schedules. Well, thank you very much and there's a link in the chat too. If you're not familiar with how to scan that QR code or it didn't pop up, there is a hyperlink in the chat. It's not a hyperlink though, but you could cut and paste it and put it in your browser and it'll take you to that same form. So thank you very much for joining us tonight. I know it's quick, it's very surface level. I hope you found at least one nugget that is something that you're going to follow up on because of your time with us watching this presentation. If nothing else, read your governing documents, read all of them, but go through and read that insurance section and highlight, circle words, and ask questions of your community manager. Bayot and Lamont, fantastic. They will join your virtual meetings and board meetings, can answer questions for you. They are top rate professionals that we rely on the daily to help us help you. And thank you. Thanks for attending. Thanks for any of the presentations that you've watched this year. If you're one of our clients, thank you from the bottom of the heart for your business and for helping keep the great people that work here employed and paid and having great work-life balance that we strive to provide. If you're not one of our clients, we're always glad to have that conversation with you, and have a happy holidays. We hope that you have a wonderful Thanksgiving, Halloween this week, Thanksgiving, and Christmas and other holidays that are this time of the year. Enjoy the time with your family and stay safe, everybody. Thanks for joining us.